Most people are stuck in a trap, trading their limited time for a paycheck. But in 2026, the game has changed. The wealthiest 1% don't work for hourly wages. They own assets that pay them while they sleep. Today, I'm showing you 5 specific assets. You can start building today too. Generate monthly cash flow. Let's dive in. Dividend Kings stocks. These are companies that have paid and increased dividends for over 50 years. These are the most paying dividends and clear explanations about the streaks, the advantages and the yield, 2026 approximately. 1. Coca-Cola, KO the king of cash flow. 2. Johnson & Johnson J&J, the healthcare fortress. 3. Procter & Gamble, PG the household staple. Now let's dive in with deep explanations for the 3 best stock. Coca-Cola is the ultimate defensive stock. Even when the economy is bad, people still buy small luxuries like a soda. The streak, increased dividends for 63 consecutive years. The advantage, they have massive pricing power. When inflation goes up, they simply raise the price of a bottle by 10 cents. Because millions of people buy it every day, that 10 cents translates into billions in extra profit to pay shareholders. A yield, 2026 approx, 2.8% to 3.1%. First up, Coca-Cola, ticker symbol KO. For over 63 years, KO has sent more money to its shareholders. What makes Coke a dividend king? It's simple: ubiquity and pricing power. No matter the economic climate, people reach for a soda. When inflation rises, Coca-Cola can slightly increase prices across its vast distribution network, funneling more cash directly to you, the investor. This makes them incredibly resilient. Next, we move to the healthcare giant, Johnson & Johnson, ticker Johnson & Johnson. With over 62 years of consecutive dividend increases, J&J is a testament to the stability of essential services. J&J's strength lies in its diversified portfolio of essential products. From consumer health items like Band-Aids to groundbreaking pharmaceuticals and medical devices, their offerings are often non-discretionary. People don't stop needing medication or medical care during a recession. This constant demand creates an incredibly stable revenue stream that fuels those consistent dividend raises.
Procter & Gamble, PG, 9+ years of growth.
Finally, the household hero, Procter & Gamble, ticker PG. With an astonishing 69 consecutive years of dividend growth, P&G is truly in a league of its own. Asset number 2, REITs, real estate. Investment trusts. Want to be a landlord without the leaky toilet phone calls? REITs allow you to own pieces of massive commercial properties. Quick example of fast profit real estate investment trusts are modern villa luxury, modern apartments, modern skyscrapers. Any of these could get you much and more skyrocketing profits. Asset number 3, high yield cash. Accounts. With interest rates shifting, lazy money in a standard savings account is actually losing value to inflation. The silent thief concept. In 2026, with inflation often hovering around 2.7% to 3% and standard big bank savings accounts offering a measly 0.01% to 0.40%, the math is brutal. The math: if you have $10,000 in a standard account, earnings, $40 a year at 0.4%. Purchasing power loss, $270 a year to 2.7% inflation, net result: you are $230 poorer in real value by the end of the year. Asset number 4, digital real estate. This includes YouTube automation channels like this one or niche blogs. These are assets that gain value over time. As these platforms gain authority, they become magnets for traffic. Your content becomes a 24/7 salesperson, earning you revenue while you sleep and appreciating in value every single day. Asset number 5, private credit and bond. Ladders. In 2026, individual investors have more access to private lending than ever before, often yielding 8 to 10%. This isn't just investing, it's creating a predictable, high-yield cash flow system that turns market volatility into your greatest advantage. Visualizing your wealth can be difficult, but in 2026, the smartest investors are building what we call the income staircase. This is a bond ladder. Instead of putting all your money into one bond and hoping interest rates don't change, you stagger your investments across different years. Look at the yields on each step: 4.8%, 5.1%, 5.4%. By 2026, interest rates have stabilized at a level where you can lock in serious, predictable returns. Here is the secret. When the 2026 step matures, you get your original cash back plus the interest. You then take that cash and build a new step at the top of the staircase for 2031. While others are guessing where the market goes next, you're simply walking up the stairs. This is how you build a wealth engine that never runs out of fuel. The secret isn't picking the perfect one. It's starting today. Disclaimer: I am not a financial advisor. This is for educational purposes. Hit subscribe to grow your capital with us.